I want to talk about long wick candles. Sometimes you see a candle with a very long upper wick or a very long lower wick. What does it signify? How does it help you in trading? You see, price action has everything you need to make a profitable trading. So when you observe a long upper wick in a candle, it's simply telling you that the bulls were in control initially. Price was moving up, and at a point, bears took over the process and were able to subdue the bulls and bring price down, either below the opening price or still above the opening price. But the fact was that the bears dominated in the later part of the section. That is what an upper wick in a candle signifies. What of a lower wick in a candle? What does it signify? It signifies that the bears were in control in the early part of the section and price was moving down smoothly. All of a sudden, the bulls woke up and took control of the game and were able to push price up far above the points the bears had taken it down before, and either take it to close just a little below the opening price or above the opening price, telling you that the bulls had control in the later part of the session. Now, how do you take advantage of these long wicks? You see, in price action, when you mark out your key levels, which is your area of support and resistance, where price found support and found resistance, watch out for these long wicks around that area. So let's use this for instance. Here is Euro JPY moving in a downward trend, and it's created this first key level here. So when we saw this key level, when it created this key level, price rallied up and then dropped again. And as price was dropping, price dropped far below this key level, about 60 to 70 pips below this very previous key level. However, when price moved down to this point, the bulls decided to come in. And when the bulls came in and pushed the price up and the price just closed a little below the opening price, that created this very long lower wick. And as a result of that, it gave a signal that the bulls are in control. So a trader at this point begins to look for bullish confirmation to know whether he or she will go long. So let's look at this. We're having this resistance area, which we agree is a key level. In that area, we had this long wick telling us that there is so much presence of sellers above here. So with confirmation of bearish candles, one decides to sell at this point. This wick at this point is a sign that sellers were still much in control. You can see how price pushed down. There was a lower wick here and price pushed up. Wherever you observe a lower wick, price usually push up. The lower wick is showing you the presence of buyers down there that were able to push the price and subdue the sellers, overpower the sellers. In the same way, when you see the low upper wick, it means the presence of the sellers that were able to subdue the buyers. The price action tip there is that you should always look for this lower wick and upper wick around your key levels where there is resistance and support. So in summary, an upper wick in an area of resistance, it shows bearish trends over the bullish trends. Look for confirmation and then sell at that point. On the other hand, if you're able to find lower wick in the area of support, it signifies bullish trends. Therefore, look for confirmations and buy that asset. I hope this helps you. Thank you for watching, and do subscribe, share, comment, and like.